Well, hello everyone, I'm Dr. Stock and this video is for entertainment purposes only, and today I'm going to bring you a slightly different kind of video than what I'm used to and what I'm used to bringing to you guys. I think that there's a really significant opportunity that we have that's well, kind of something that's hard to find, easy money in the stock market. And now, mind you, there's always risk involved, and you really need to know what's going on here with the options and stuff that I talk about. So it's certainly not anything to jump into blindly. So if you know all about options, call options, put options, buying them, selling them, then you're in good shape for this. If not, just don't jump right into it and not understand the risks that you're getting yourself into. But if you do understand those risks and you are following the things that I'm saying, then I think that this is an incredible opportunity that we have, and one that's pretty rare to find. So with those risks involved, and if as long as you're not afraid of a possible assignment or anything like that, I think that you're really going to enjoy what I have to show you. So it deals with NNDM, nano dimension, and regardless of what you look at for the long-term fundamental value of nano dimension, I think they're actually kind of stuck in a spot right now. So I actually don't think that they're going to move in really big ways anytime soon. And so for somebody who normally takes long positions and goes for the fundamental value of a company, now I do have a position, a long-term position in nano dimension. That's kind of what led me to make this discovery in the first place. So with that long-term position, it was just a small spot, 100 shares. I'm like, well, I'll just hang on to it and I'll see what happens. And honestly, I was like, well, instead of sitting here with these 100 shares, why don't I bring options in and see what can go on there? So I was just like, I'll just sell a covered call, reduce my cost basis a little bit, but it ended up being a lot more interesting than that. So stick around and let's get ready to rock. Welcome back. If you guys like what I have to say, make sure you hit that like button, the subscribe button. And if I really help you out finding these opportunities and you do your own research and due diligence, and then you would end up taking action based off the opportunity that I brought to your attention, why don't you consider hopping over to that Patreon and we can talk more about this stuff more of the time. You can see whatever else I have to offer over there. That is down in the description. You can find that link down there. Also, you'll get those referral links for Webull and also for Moomoo. Moomoo is giving away just a ton of cash right now in the form of stocks just by signing up, depositing your money, and then I get some free stocks for the referral. So that's a nice return on you, a return for you, and also I get some back in the process. So thank you guys. Let's move on from there. I'll bring up the chart for nano dimension and I'll tell you what I see. All right, so here we're looking at the chart for nano dimension, and you can see it had an incredible run from being a penny stock to running up over to almost $18 per share. Then we had the sell-off in tech and high growth, and since then it's had trouble getting up off the ground at being under $6 per share, but not under $5 per share, and that's really important for what I have to talk about today. So we can see that sell-off, and then back in May we had that what was formerly the peak sell-off at $5.39. And then more recently, we had a sell-off that took us all the way down to $5.23. Now, Nano Dimension is going to be very resistant to sell off below that level, in my opinion. And there's a very specific reason for that. Or I should say that we will find very strong support as we push down near that $5 mark. As a matter of fact, anything under $6, I don't think that we're going to stay there very long. I think it's going to keep rubber banding back up towards that $6 mark for very good reason. And then that also ties in with the options plays that I have to present to you for Nano Dimension. So in order to discuss that downside of it, you have to understand from their balance sheet that they currently sit on, as of June 30th, $1.32 billion in cash. And so that also, if you look at the total assets, that puts them at $1.54 billion in total assets. Now, that alone isn't really enough to substantiate my claim right now. So when we look at this, we want to scroll down to the total liabilities. They only have $33-ish million in total liabilities. So 1.54 billion in assets, 33-ish million in liabilities. That means they still have about, after the liabilities are paid, they have about $1.5 billion still that the company has, like just with pretty much their assets, mostly cash alone. So that part itself is pretty cool because that's downside protection for us for this stock. So something that you could do is you could buy it outright and, you would have those shares for that price. Another thing that you could do, because we do have that downside protection, is that you can sell puts on this, and which means because you're selling, you're getting cash as soon as there's a buyer. And that to me is pretty awesome. Now you need to understand, if you haven't looked at this, you might want to look into it. But when you sell a put, you can be assigned to buy 100 shares of that company, like that you have to because you bought that put option. And I'm not going to go into the lesson on options here, but you do need to understand that. So if this company should go down to like $4 per share, then you would have to, and let's say your strike price is $5 per share, you still have to pay $5 for every one of those 100 shares for every put option you sold. So please, with that understanding, there is some risk involved. So unless you understand those risks, I wouldn't jump right into this. So I'm going to go into the options part of this, and we're going to start looking at the puts. And we'll actually start with something near term. We'll go with September the 17th, but you'll notice I have January 21st of 2022, which happens to be my birthday. I was not born in 2022. I'm not from the future. However, January 21st is the celebration of that birth. So moving on from there, when we look at the puts, so here's the $5 strike price. And if you sold this put, you would get a free, in my opinion, $5. And you wouldn't have to even touch that, because I think we have such significant downside protection, because the market cap right now, we're trading at $6.07. We'll just call it $6 per share. The market cap right now in NNDM is rocking right about $1.5 billion, which coincides with the fact that if we take their assets minus the liabilities, we're still at about $1.5 billion. There's very little downside risk that it should go that far, and very little downside risk that you would even have the option exercised from the buyer and get assigned to purchase those 100 shares at $5 a piece. And if you did, then in my opinion, you would end up back in the positive. And so it would be a very bullish move from that standpoint. So even if you did get assigned, it's still not the worst thing, because you're still getting a deal on those shares. So keep that in mind. So I didn't go for September. What I did was instead I went for January 21st of 2022, just so that there was some time value on this thing. And the thing is, the farther you go out in time, the more you risk company news affecting their cash position. And for NNDM, acquisitions are an absolutely huge part of that cash position, or at least so they claim, that they're holding on to that cash, waiting to rotate through the pandemic before they really scale up their advertisement and really trying to push their products and everything. And they're also looking for acquisition targets to use that cash on. So these are things that can be mitigating factors to their share price, but they can also bolster their share price. So just be aware of that as I talk about this. So what I did was I went for the January 21st expiration date, the $5 strike price, and I sold a put for, it was 67 cents was the premium at the time. Now it's 62 cents, but mind you, that changes all the time. So time value will shrink that, but then you can also have volatility that can spike that value. So it'll fluctuate. It'll go up and down from where it's currently at. So there could be times that you would benefit more. There's times that you can benefit less. But you know, if you know about options, then you know those things. I'm going to move on from there because I have a lot to talk about and not a lot of time to do it. So if you went for the $5 strike, you got paid that 62 cents per share for 100 shares. That's $62 in your pocket. And you didn't really do anything besides sign a contract that you agreed to pay $5 a share for 100 shares for every contract that you sold that put option on. So that means that your cost basis is now down to $4.38. And I really think we have significant downside protection for anything under $6, that we're going to see a really quick recovery. And I highly doubt that we're going to drop below 5. I highly doubt that over this time horizon that we're going to get assigned on these put options that we sell out there. So I really think that these put options can be easy money. Now it has to be most usually a cash covered put. So one of the other things that happens is if you do sell this put option, you have to set aside the money to cover every put option that you sell. So you'd have to set aside $500 in your account. Your broker does this automatically. You don't have to worry about it. But that cash has to be there and ready to go should you get assigned in order to purchase those shares. So that's one thing to look out for. So you'd actually have to hold any shares whatsoever. You can buy the put options for January 21st of 2022. And so there's not a whole ton of time. Like, it's not a leap option where you have to worry about a lot of company news and changing, but mind you, change happens. So it's definitely still a risk. But I went for January where there was time value and I could still benefit, rather well from the put option being sold with the $5 strike price. So that was exactly one thing that you could do. Now, for me, I already owned 100 shares. So even though I sold a put option, figuring that if I got another 100, I'd be all right, because I think it'd go right back up over $5 per share, plus my cost basis for those 5 shares, because I got it at 67 cents per premium, would be $4.33 a piece. So I still think that I would be making money on that deal. So something else that I did was I took the opposite approach. So what I did on that same date with the 750 strike price was that I sold a call option, which is typically seen as a bearish move. Now, I mentioned that we have downside protection below $6 with their cash position. They are in very good standing there, and I really don't think that the stock price is going to go much below where it is. And if it is, I believe it's a buying opportunity. My own personal take, definitely not advice to anybody. So with this call option for 750, people are like, well, okay, so I catch the appreciation. Now, mind you, I only do covered calls. I don't do naked call writing. So I have the shares for any calls that I sell call options on. So if I get assigned here, I have to sell those 100 shares to whoever the buyer of that contract is, if they exercise the right to buy those shares. Now, let me move on from there, because again, this is not an options lesson. I'm just trying to give you the pieces that branch out, so you can be aware that there are risks involved and there are other details that go along with options. So moving on from there. So with that 750 strike price that I have, I can catch any appreciation up to that 750. And then because I sold the put and I sold the call, I ended up with $1.57 in premium per share. So that means I can go up over $9 with their stock price, which currently is around $6. So that means a 50% increase before it makes sense for the before I start losing money, I should say. I can go up to like that $9 mark. So in my opinion, that's pretty cool. So I can catch the upside, yes, by selling a call option. If it gets assigned, if those get taken away from me, then I definitely risk losing some of that upside potential that it could have. And NNDM has shown volatility in the past. We could definitely see volatility in the future. And so we're limiting our upside by doing that. And we're also risking getting assigned to sell the shares that we hold. Now, mind you, these are risks that I'm taking. I'm fully aware of these. And I also know that I have the option of buying back those contracts that I sold, those options that I sold. So I probably won't. I'm probably going to see it right where it's at. Now, I mentioned downside protection, getting back to the upside protection. For that, we have to go over here. And this is something from March 3rd, 2021. If you don't follow Nano Dimension, you might not know. And all we really need is this part right here. The company raised equity 8 times in 6 months for NNDM stock. Whenever a company raises money that many times in that little time frame, just a half a year's worth of time, that starts to it looks negative for the company, and the shareholders are tired of getting their shares diluted. In other words, the shares that they hold being devalued. So this is something that I believe is significant upside protection from the stock price going up too fast, too quickly, because the stockholders, the shareholders, have been burned so many times before when they thought it was really on a run. Then their shares got diluted. Then it started running again. Then their shares got diluted. And that just kept on happening. You can see here, it says 8 times just by March. So from September to March, we had 8 different capital raises, tons of shareholder dilution. This, to me, is upside mitigation for their stock price, which means upside protection from getting assigned by selling those call option contracts. So if we come back here, we're right in between the $5 and the $7.50. And I think that we're going to be stuck there for a little while. Now, mind you, you don't have to go out as far as January. You can make littler pieces and take on less risk by going with less time. So you can come to September or October. So if you went to, let's go with October because I already showed September, you could sell a put for 17 cents premium, which means you get $17 handed to you directly. And then you'd have a cost basis of $4.83 if you got assigned to buy at that $5 strike price. Mind you, you wouldn't necessarily have to. I don't think it's going to go down that far. And if you wanted to do the same thing on the other side and sell the call option, if you already hold on to some shares and you plan to write a covered call, which I never recommend doing naked calling, because that can be really rough. It can really burn people really fast. So for that, you could get $23. So you basically just got $40 free cash in my opinion, if you hold on to those shares, at least 100 for every contract that you sell, you can get $23 to the upside. So you can do one, you can do the other, especially if you already hold those shares. And, you know, then it makes perfect sense. So it makes more sense to hold the shares and sell the covered calls. If you don't currently hold the shares, selling the puts could make a lot of sense. So that's the opportunity. And I think it's really incredible because it's not often that we see such significant downside protection like we do with NNDM. And also, thanks to the capital raises, it's going to make it really, really tough. Now, mind you, I mentioned $9 before I start really losing money on this, based on the put that I sold and the call that I sold, and those strike prices that I also put them with. So they peaked out near that $9 mark. As a matter of fact, $9.30 on one day, and then they just trailed off ever since. Every time this stock really starts running, investors get really afraid of share dilution. So people quickly capitalize on any gains that they make. And so we have downside protection, we have upside protection, which means that we're stuck in a range, and being stuck in a range that's between the $5 strike and 750 strike brings about really interesting options opportunities. All right, so now it's back on my beautiful face with my perfectly coiffed hair. Um, this is really cool. I mean, honestly, I think it's one of the neatest things that I've ever seen for options plays. And I don't know that Nano Dimension stock will stay above $5. I don't know that it will stay below 750 in the near term. This is speculation on my part, and this is my opinion. And I think that I'm fairly safe with this call that I've made and this put that I've made. So I mean this. These options that I've sold. So like I said, I've sold a call option, I sold a put option. Mind you, I shared this throughout the week in my Discord, and I figured that I'd bring it to you guys since the opportunity still sticks around. I think it's going to be around for a little while. And like, honestly, some people might choose not to do this. Fine. Some people might choose to do this month to month. Fine. Some people might choose to do it a couple months at a time. Fine. Like, you could even do it as a leap option if you want to, but the more time you go out, the more time risk you have. Like, even though you're getting higher premiums, whatever happens to that company in between, whatever happens to its share price, you're starting to bring in those variables and more room for super positive news, which can hurt you on the upside if you're selling call options, or super negative news, and that can hurt you on the downside should it sell below. So those are all things to consider. So in summary here, I think it's a really incredible opportunity. I think that there's very little risk involved, and I really hope that you guys at least like what I have to say, and I hope you're following it. And if you haven't looked up things about options, if you haven't educated yourself about them, I have just a couple of videos. I plan to make some more videos as time allows. But there's a ton of opportunity, but you have to understand the risks that are there so you can really see when you have true opportunities versus really risky plays. So thank you guys for stopping in. I really appreciate it. Let me know what you think down in the comments. Check out my referral links that I have. So Moomoo, you can sign up, deposit, and you get 4 free shares, up to 4 free shares valued up to $3,500 for that deposit. That's free money for you. GM shares are being given away right now, which like $50 a piece. So you might want to check that out. I get some as a thank you in the referral, and it's absolutely no cost to you. Same thing with Webull. And then finally, Patreon. If you want to know some of the things that I have to say prior to bringing it to YouTube, you can check it out over there. I also have my weekly newsletter, my weekly watch list of stocks, and then I also have my growth portfolio, my dividend portfolio, and I'm working on putting together a crypto portfolio for everyone. So thank you very much for stopping by. I really appreciate it. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.